All right, then, moving this along as we begin to wrap up, we have our final panel discussion session. Quite a lot has been spoken at various fora regarding the Ghana real estate market, with all the support they're having from the government, despite the challenges, and also the international communities putting the wind behind their sails. So to take us further into this, we have Mr. Tony Sekere. He's the CEO of Grow Ghana, and he will be with his panel, who he will introduce. A pleasure being on this call with you, sir. How is your day going?
Thank you, Ayo. We're good. Very well,
Fantastic.
thank you.
Fantastic. So I'll hand this over to you.
All right. Thank you so much. And my appreciation to the organizers, API Events, for giving us the opportunity to highlight the current residential market in Ghana. In this session, we're seeking to provide a lot of insights into the current trends in the real estate market in Ghana, where we will strip all the asset classes and then provide specific insights into them. With me today are 4 panelists who are industry stalwarts. And if you will allow me to introduce first one of the panelists, Fusena Abu. Fusena, are you on board?
Hi, Tony.
Hi. Pleased to meet you once again. And Fusena Abu is the Managing Director of Gold Key Properties Limited, one of our foremost developers in the market currently. And next is Holga Adam, Head of Real Estate Development at Clifton Homes. Clifton Homes being a residential development firm in Ghana. Holga, are you on board? Holga, can you hear us? Okay, and our next panelist will be Tola Akinami, the Head of Real Estate Finance West Africa for Stanbic IBTC Capital Limited. Tola, you're welcome to the panel. How are you doing?
Thank you very much. Good to meet you again, Tony.
Brilliant. Thank you. Thank you.
All right.
And next on our panel is Mr. Anthony Ochri, a director of Indigo Homes Ghana. Indigo Homes are the developers in the mid-to-end residential space. Welcome on board, Anthony.
Thank you, Tony. Great to be here.
Brilliant. And I hear Holga will be joining us soon. And just to intro, I believe I've introduced him, but along with that, I'm sure he'll be on board with us. But before we delve into our panel discussion, I'd like to take the opportunity to give a brief overview of the current real estate market, looking at the various asset classes and how things sit. When we get into the panel discussion, then we'll give the opportunity to our panelists to provide us with specific insights as in their areas of expertise. So if I may just share my screen now. Thank you. Allow me to just flip through. Sorry. Right, thank you. So as I said, we'll be taking an overview of the Ghanaian real estate market. And most of this will be looking at the asset classes in the sector. Next will be our market indicators. But looking at the highlights for the residential property segment and the various commercial property segments as well, and the outlook for the sector for the next years and for the next year and beyond. Just to provide a background to the real estate sector, in 2020, the GDP contribution for the real estate sector was 12.2%. Quite significant given that we're a developing country, and therefore agric and the extractive sectors give us quite a number or quite a bigger contribution to the economy. And therefore, the real estate market with that figure is quite significant. And the key player in this market is the private sector. Government participation has been minimal hitherto. Currently, we've seen that there are quite a number of public and private partnerships, particularly in the development of affordable housing units, which is seeking to address or target the mid to low market segment. In the industrial side as well, there's some form of government participation where the One District, One Factory initiative has led to a good demand or development of factory developments, and also the demand for storage space. The two main types of our real estate assets prevalent in Ghana is the residential and the commercial side, where primarily made up of office, retail, and industrial. Residential real estate has mainly single-family housing, multi-family housing, apartments, townhouses, and condominiums. Whereas the commercial real estate side, we've seen office properties, retail, made up of formal and informal, and industrial properties, hotels, and purpose-built student housing. For the purpose of this presentation or panel discussion, we will delve into the first three, which is the office properties, retail, and industrial properties. But if any of the panelists has experience or wants to give us an insight into any of those, by all means, we're happy to discuss those. Now, if I may delve into the sector, particularly for residential property segments, currently it is the largest one in the country, where we are registering about in excess of about 100,000 transactions per annum since 2015, and it is primarily dominated by the private sector, where individuals and corporates have a lot of involvement in development of residential development. In Ghana, we have 3 housing categories: the luxury high-end or high-end, the mid-end, and low-end residential developments. In terms of location, 99% of our high-end residential properties are located within the traditional prime nodes of Accra. And this would include the airport residential area, cantonments, Laboni, and Ridge. Now, we've noted that lately there is quite a number of developments that are flowing into the peripheral neighborhoods located close to these prime nodes, which signifies that those prime nodes are overheating, or maybe the initial cost of land acquisition is driving other developers to look at alternatives, which is a good trend in that we see quite a number of neighborhoods which are close to the CBDs, largely undeveloped, and therefore we see that there's a gradual spread or appetite for developers to look at those areas. On the low end side, we also see that the affordable housing is attracting a little bit of interest, seeing that there is an increase in housing deficit, which is estimated to be over 2 million housing units. I'm sure Tony Ocho will give us an insight into how the affordable housing space is faring at this stage. For the office side, the supply has increased considerably between 2017 and 2018. And we see that this is primarily in response to an economic boom that happened between the 2011 and 2014. That's basically due to the oil find in 2011. And therefore, there was quite a significant number of office development that started within that period. Therefore, within that space, we saw that most of these came on stream. and that has resulted in excess of about 240,000 square meters of office space as of December 2020. Lately, we have seen that the office segment has seen large corporates having developed their own purpose-built offices. And therefore, this has increased the stock of properties or the stock of space available for rental, seeing that they gave up their existing rental properties and developed their own purpose-built offices. Even as before COVID, we realized that the serviced office concept was also becoming a popular trend, primarily because some corporates were looking at flexible lease options rather than tying themselves into long-term leases. And basically because business strategy was changing, sometimes we realized it was basically due to uncertain economic condition or business conditions, and therefore they preferred to have a flexible concept. Now we realize that such flexible arrangements have now taken root, primarily because of the advent of COVID, where tenants are now looking at situations where they could easily either sublet or give up office space subject to landlord's consent. Another trend we've seen in the office sector is that most tenants are moving or want to have standalone office buildings. Some of these we've realized is basically because of for security reasons, depending on the industry. So most of our corporates in the mining and oil and gas sector have preferred to have to be in standalone buildings. These buildings are basically repurposed or remodeled residential buildings that have been turned into office buildings. The achieved rentals for office space, for grade A office space, is between $25 to $28 per square meter per month, whilst B grade is achieving between $15 to $20 per month. The retail sector has always been made up of formal, which is essentially the Western style retail centers or malls, and informal retail space. The formal sector has takes up about 10% of this segment, whilst the remaining size is made up of the informal retail space. The informal retail space is now gaining some traction. We've seen that most residential properties along busy roads are being converted into high street retail outlets. Of particular note is our streets within East Legon, for example, where we note that most of these have been converted to retail centers. And we also noted that other retailers who are located in malls are opening other branches along these nodes. So it is one trend to watch, seeing that they're not exactly competing with the Western style malls, but it's a trend that is catching on at this moment, which also sometimes moves that next trend for retail would be community malls. That's that most of these malls, the success of the malls will depend on being located in populated residential nodes. The retail market was one of those that was hardest hit by the COVID-19 pandemic, particularly because of the restrictions that were imposed by the lockdown and social distancing protocols, which meant that a number of our retailers were unable to open, and they had to eventually shut down during that period. The restrictions have only just been lifted sometime towards the end of last year, and we've seen quite a significant recovery in that space. Retail has been the sector that has surprised all us. We've noted that the recovery has been quite rapid, in our opinion. Looking at the turnover figures that we recorded in most of our managed malls, we've seen they compare quite favorably with 2019 figures. 2020, of course, we all see it as a write-off, and therefore the comparison there would not be fair. But if you also compare footfalls from same time this year to the same period in 2019, we've realized that some of these, for most of the malls, the trend has been that the footfalls are on the increase. We've also looked at or analyzed the turnover figures, because we've seen quite an uptick for most of the malls. And given the amount of footfalls that we are seeing here, retailers are looking at or are getting sales channels outside of the traditional bricks and mortar, which gives us the indication that some of these may well be due to deliveries and online retailing. In the second, we also noted that a secondary market is developing in the retail side, where retailers such as Melcom, Adidas, and Spar have opened community shops primarily located within well-populated residential neighborhoods. On the industrial side, hitherto it was quite stable, or I'll say less vibrant compared to other sectors, but it has gained a lot of significance given the advent of COVID, and it has been fueled by the requirement for storage space and distribution centers by retailers who require these for online deliveries. Another spur of the industrial side has been, as I indicated earlier, the One District, One Factory initiative, and therefore which has driven private sector involvement in the establishment of industrial parks. So we have the Dawa Industrial Park, for example, located within the free zone industry that has come up and is currently serving the market. And the rental values for the sector has ranged from $2 per square meter all the way up to $7. And I must say the upper side is what is currently trending. If I may quickly go back to the fifth slide, which provides us an insight into market indicators. As you see there, the average yields per each market segment in the industrial is yielding a rate of 11% to 14%. Residential giving us a yield of 10 to 13.5%. Office 8.5% to 12.5%, and retail with a yield of 8% to 13.5%. The residential high end is giving us achieved rents of between $1,500 to $3,500 per month. And this will primarily range between a 1-bedroom flat to a 3-bedroom home. And that is how it has been structured. It's quite a significant difference from the asking rental to the achieved rentals. And it's primarily because of the advent of COVID, where most of the high-end residential was being fueled by or being demanded by the expatriate community. And because of the travel restrictions, that demand overnight got removed. We've seen quite an uptick in that following the relaxing of the COVID restrictions. Even though it's still translating into quite a high vacancy rate at 40%, which is quite a high one compared with other regions. But we think that demand within the next 12 months will be high, given that we've seen quite a significant number of the travelers coming in, and even some of the initiatives that have been provided by the Ghana Tourist Authority in terms of bringing in tourism, promoting tourism, and Africans in the diaspora coming through has given us a big uptick, with the largest going into the apartment sector. Again, on the supply side, in the next 12 months, we believe there's quite a development pipeline that is still coming on stream. And we believe that developers are still not deterred by the high vacancy rate, and the few that we know are still coming on board. On the office side, quite a significant difference between the asking rentals and achieved rentals, between 30 to 37, and now we're achieving between 28.5 to 28 for grade A offices. And that's primarily because of our good old COVID. But we realized that even pre-COVID, there was a trend anyway, as I mentioned earlier, towards serviced office space, where most corporates had begun to downsize and also looking at flexible lease options. And again, that is translating into quite a high average vacancy rate in terms of the office space. Therefore, the demand within the next 12 months, we think that it will be quite stable, even though the supply is still on the up, primarily fueled by corporates that have virtually vacated their office spaces in favor of building their own. Again, there's been tenants that have given up space within the last few months, and that trend is not set to improve anytime soon. And so that is contributing to the uptick in the supply side. Again, we also have some other developments who are still in construction stage. Bank of Ghana, for example, is putting up quite a huge complex, which means that their existing space will come on stream. Industrial high end, not too much difference in terms of asking and achieved rentals, primarily for the reasons that we have already stated that they have quite a high demand, which is set to continue within the next 12 months. Supply side as well is on the up because of the investor sentiment towards that sector. Retail has, as indicated, suffered the most. So as we can see, quite a huge, about 50% reduction from asking rentals to achieved rentals. And but because of the initiative that some of the landlords or some of our clients put together, the vacancy rate has primarily improved. And some of these basically meaning that there were some rental concessions that were given by tenants, by landlords, and also rent holidays were given by landlords to ensure that tenants stay afloat. Again, we see that the demand for space is on the up due to the recovery that we've seen. And on the supply side, we have a couple of Western style malls that are in construction stage at the moment and believe will be coming on stream within the next 2 to 6 months. Now, on the side of the outlook, we believe that the residential mid-end residential market will continue to be active, and there will be a number of high-end developments that is expected outside of the traditional prime nodes. Office development will also be leaning towards institutionally owned and owner-occupied, but investors would be revisiting plans for construction of office developments. We think that such office developments will look at the trends now, given that people are looking because of the hybrid working system that is currently in the market. And we also, as I mentioned earlier, an additional Western style mall will be on the market very soon. Industrial sector expected to receive its fair share of increased supply. Demand side, as I previously said, would be on the increase for residential, whereas office sector will be stable but expected to pick up probably after 24 months. Retail space, we're already experiencing the increased inquiries with actual space take-ups ranging between 60 square meters to 100 square meters. Some existing retailers, particularly in the electronic sector, we have seen that they are upsizing in response to the market. The industrial market is also responding to quite a surge in demand for data centers. We've seen that happen where, for example, warehousing space is looking to be repurposed for use for data centers. So that, in a nutshell, is the overview of the Ghana market. And after this, we'll be delving into our panel discussion. If I may just quickly get off the screen. So, yeah. We can get into our panel discussion. So, I'll first like to address an issue with Fusaina. And Fusaina, I'll just need to have your view. I mean, recounting the Gold Key experience, for example, given that you have virtually created an office node on your own, where your cantonment city sits between the two traditional nodes of the CBD in Ridge and beyond Airport City. We'd like to know what has been your experience and what your current corporate tenants, for example, what their current sentiment is within that space.
Sure. Thanks, Tony. So yes, you're right. Cantonment City was created pretty much from scratch about 5 years ago. Previously, the space, although prime, was not particularly well utilized. It was covered in colonial police bungalows, which were few and far between. So we entered into a joint venture with the police, where we built a new police station, we built a new road, and other things. Now, in exchange for this, we received the land, which is now Cantonment City, and we started development. Our first tenant was Huawei, and now we have Vivo, PricewaterhouseCoopers, Ernst & Young, and other multinationals. Now, we found that what really drew tenants to Cantonment City when there was nothing there was the vision for the overall development. There was an appreciation that this was a prime location and that the vision was to create a mixed-use development. So somewhere that offices could locate themselves, but workers could also live if they chose to do so, where there would be restaurants, a hotel, basically everything that you need to do business. Now, I'd say that we're about halfway through the Cantonment City development, and the mixed-use side of things is starting to take off. So that is really what we've been trying to create, and we're on our way to achieving. Now, I think that the second part of your question around tenant sentiments. So really, what drew tenants to Cantonment City was the promise of grade A buildings as well as the mixed-use concept. Now, we found that over the years, the commercial market has been tough. There are other developers putting up similar commercial office buildings. But the key differentiator really is genuine grade A buildings. Now, I think that you'll find that the developers on the market who are meeting those standards are doing fairly well. Tenants these days really are incredibly discerning. They don't expect any difference in an office building that they would occupy in London or New York compared to Accra. They want to have all of the comforts and flexibilities that you would expect in an office anywhere in the world. So I think that even though the market is tough and there is competition, for those who are successfully putting out a high quality of product, there's definitely a sustained demand.
Okay, thank you, Fuzena. I mean, the two things that you said jump at me. And one thing you mentioned was to do with a mixed-use concept.
Yeah.
In your opinion, do you think that is the key driver for corporates in terms of locating in an area or within a development where they can get the various uses? And what sort of uses are we thinking about here? Is it a case that they want to have, say, an element of retail and shops within that particular area, or amenities, for example?
Okay. So I think that what is really important to them is it's not so much shops because, but more convenience. So things like the places to have lunch, the barbershop, the salon, like the small conveniences are what they expect to see. And then Also the ability to stay near to where you work. So we have residential as well as commercial in Cantonment City, and a number of our commercial tenants also rent or buy residential property in the city so that they can walk to work. Life is flexible, and I think that with increasing traffic, which genuinely is becoming more of a problem in Accra, that ability to house key members of staff near the office is really important. If companies receive visitors who are in the country temporarily, they really want them to have that flexible near to the office experience. So we have a lot of instances where companies rent space in office buildings, and then they will buy apartments in Cantonment City or rent them.
Okay.
So really, I'd say that the mixed use focus is very much on being able to provide residential and commercial in close proximity, but also being able to provide those day-to-day life conveniences very nearby.
Okay, that's brilliant. Holger, you're welcome to the panel discussion. You got a bit late, but we introduced you in your absence anyway. So thanks for coming in. Now, we all know has been involved in residential development for quite a while now. And I believe that you've gone through several cycles, economic cycles, and got quite a bit of experience as to what is happening and how you intend to deal with what we are operating now. Now, do you see any shift at all in consumer requirements where the your sector is concerned?
Thanks, Tony. Yes, we definitely do see a qualitative change in the demand. For one, demand is back, but it is not the same demand back to pre-COVID levels, but it is not the same demand. There are a couple of changes that make a substantial difference for us. For one, there is a growing role of the diaspora. And they are looking for specific properties that match their lifestyles. So what must have happened over the last 18, 20, 24 months is a reassessment of many people in the diaspora about their perspectives of lives, where they want to live, where they want to relocate to in the long term. That is fueled partly by COVID, partly by the racial motivated violence in the US and Brexit in the UK. And we're seeing an increase of demand from overseas. And these people look for two distinct property classes. For one, we have a large quantity of people that are looking for apartments that are, let's say, reasonable in size to qualify as pied-à-terre, somewhere where they feel they have a home in their country of origin, but at the same time, something that has a very clear investment proposition, something that will create returns while they are still abroad. And then there is another group of people that are looking specifically to relocate back to Ghana in their retirement age. And they are looking for larger homes. They are looking for homes less focused on the central areas with a good rental market, but rather on the scenic locations in the hills of Aburi above Accra or along the shoreline. That is one qualitative development that we're seeing on the market. Another one is that the new normal has arrived in Ghana and it is here to stay. This new normal describing the effect of the changes in working patterns with hybrid work styles or people living or working predominantly from home, which again has different requirements as for the specific apartment, which then needs to entail a working area as well, or at least the opportunity